Something feels off right now, not just in the charts, but in the atmosphere around Bitcoin itself. Prices are falling, confidence is thinning, and fear is quietly spreading. Everywhere you look, people are using the same word, crash. But pause for a moment, because real crashes don't usually feel like this. Real crashes are sudden, they're violent, they're chaotic. This moment feels different, slower, heavier, almost intentional. So here's the question most people aren't asking. What if this isn't a collapse at all? What if Bitcoin isn't breaking but being repositioned? Because while millions of people are staring at red candles trying to decide whether to sell, the real story isn't happening on the chart. It's happening underneath it. And the people who understand that story aren't panicking. They're watching. They're waiting. Fear never arrives all at once. It creeps in gradually. At first, the price drops a little. You ignore it. Then it drops more. You start checking your phone more often. Then the headlines change. Words like uncertainty, risk, pressure start appearing everywhere. And before you realize it, your thinking changes. You stop asking what's actually happening and you start asking how to make the discomfort stop. That's when people sell. Not because they understand the market, but because they want relief. And markets know this, because here's something most people never realize. Markets don't move to reflect reality. They move to trigger behavior. Fear is not a side effect. Fear is a mechanism. The word crash is powerful because it implies finality. It suggests failure. It suggests there's no way back. But think about history for a moment. The internet didn't die after the dot-com crash. Amazon didn't fail when it lost 90% of its value. Gold didn't disappear after decades of painful drawdowns. What collapsed wasn't the asset, it was expectations. And Bitcoin is no different. So ask yourself honestly, is Bitcoin actually failing, or are unrealistic expectations being flushed out of the system? Because price is not truth. Price is emotion made visible. It reflects the last trade, not the full picture. It doesn't tell you who is patient, it doesn't tell you who is desperate, and it definitely doesn't tell you who is quietly accumulating. Most people assume that when price falls, everyone must be selling. That's not how markets work. Some people sell because they're afraid. Some are forced to sell because they used leverage. Some are liquidated automatically without any choice at all. And others are buying everything they can without drawing attention. The biggest players never announce their moves. They don't tweet emotions. They don't chase green candles. They wait. They wait for volatility. They wait for confusion. They wait for conviction to weaken, because that's when liquidity appears. Ask yourself this. If you wanted to buy billions of dollars worth of Bitcoin, would you want the price going up while you're buying? Of course not. Higher prices attract competition. Lower prices attract sellers. So when price drifts downward, it doesn't always mean demand disappeared. Sometimes demand is simply patient. This phase feels different because it isn't exciting. It's draining, mentally exhausting, and that matters. Markets don't want you excited, they want you tired. Tired people don't research, tired people stop thinking long term, tired people give up, and giving up creates opportunity. Every major opportunity in financial history felt uncomfortable while it was happening. Comfort is crowded, opportunity is lonely. If Bitcoin were truly failing, something far more serious would be breaking. Not the price, but the structure. The network would be weakening, security would be collapsing, adoption would be reversing, long-term holders would be abandoning their positions. But that's not what's happening. So if fundamentals remain intact while price falls, what's really being tested? Not Bitcoin. Belief. Every market cycle has a moment where ownership quietly changes hands, from impatient to patient, from emotional to strategic, from short-term to long-term. This is that moment. It never feels obvious while you're inside it. It never feels bullish, and it never feels comfortable until it's over. Then years later, people look back and say the same thing. I wish I paid attention back then. Most people don't lose money because they're unintelligent. They lose money because fear makes them act too early, or greed makes them act too late. Fear pushes people out near the bottom. Greed pulls them back in near the top. That's not bad luck. That's design. So ask yourself something important right now. Are you reacting or are you observing? Because the people who win long-term aren't the loudest, they're the calmest. Forget asking whether this is the bottom. That question doesn't help you. Ask instead what this market is trying to make you feel: impatience, doubt, capitulation. Because once you understand the behavior being triggered, you begin to understand the opportunity being created. If this perspective helped you see the market more clearly, take a moment and subscribe to this channel. This channel is for people who want understanding, not hype. And before you go, comment below with just one word: crash or transformation? Because this isn't a Bitcoin crash, it's something much bigger. And now you see it.